Thank you, Mr. Deputy Speaker, and I let me first congratulate the member for Leeds East for securing this debate. He's an assiduous attender in this House. He cares a lot about these issues, and I respect him deeply. But in particular, I love his conversion, like his very good friend, the Leader of the Opposition, to quoting and loving Margaret Thatcher. And I can't wait to hear reports of when he visits his local Labour Party at the end of this week and how that goes down. And for my part, I'm pleased that this debate provides me with an opportunity to set out the measures that this government has already taken to ensure banks make a fair and sustainable tax contribution. But before I get on to that, I just can't resist just to deal with some of the particular points that he made about the economic context that we find ourselves in this country. He mentioned economic growth. It's important that he recognises that the OBR and independent forecasters, when assessing the autumn statement that has recently been delivered to this House by the Chancellor, said that the measures contained within it, the pro-growth measures, represented the largest boost to economic growth over the forecast period of any fiscal event in a generation. And when he mentioned, I think he said, whether austerity and cuts or public sector cuts were somehow inevitable, and that somehow this Treasury, this Chancellor, this government felt that that was a good thing, we completely reject that characterisation. And all I would say is that borrowing an extra £28 billion, as a proposal from his front bench, I don't know if it's his idea or his proposal, but the proposal from his front bench and the Shadow Chancellor, borrowing that extra money will end up to raising inflation and raising interest rates, and that is what makes austerity and cuts more likely. But I should carry on to deal with the real substance of his remarks on the banks and the subject of a windfall tax. It's first important to highlight that financial and related professional services is a vital part of the UK economy. It employs nearly 2.5 million people, two-thirds of whom are employed outside London. Indeed, in his own constituency, I'm sure he has many members of the thriving financial and professional services sector in Leeds. And as I laid out to the City UK's national conference earlier this month, I am committed to delivering the Chancellor's vision for a financial services sector that is open, sustainable, innovative, competitive, whilst also acting, and this is very important, in the interest of communities and people and citizens all across our four nations. And I would just urge him to consider my view and the government's view that these ambitions do not contradict each other. Rather, it is the UK's globally competitive financial services sector that supports jobs across this country and underpins access to finance for individuals, indeed if they want to buy a home, households and businesses who need to borrow in order to expand and invest, and consumers across the country. Now, in relation to the potential merits of a bank windfall tax, before we consider this, I just want to reflect on some of the bigger picture about the health of the UK banking sector as a whole. We should be encouraged to see a strong, well-capitalised and competitive banking sector in the UK, owing in no small part to the significant regulatory and market reforms that have been implemented since the global financial crisis. Banks are the most important source of credit, providing individuals and businesses with the financial resources to succeed. For example, in 2022, banks lent a total of £65.1 billion to small and medium-sized businesses. This is the majority of businesses in our country, and helped 370,000 first-time buyers onto the property ladder. And this illustrates that these institutions are not, in the pockets of fat cats. They serve the nation. They serve ordinary working people and early-stage entrepreneurs and business people. Now, in addition, the retail savings market currently offers a range of competitive options to savers, who can now access the highest rates in recent years on a variety of instant access and fixed-term products. And one other point that was brought up again by the Honourable Member for Strangford and the Honourable Member who secured this debate for Leeds East. On bank branches, I share his view that we need to maintain access to cash for rural communities. And indeed, what he will see from me and this government is that we should make sure we speed up and spread banking hubs throughout as many of our communities as possible. Of course.
I'm very grateful to the Minister for giving way. I opened one of these banking hubs a fortnight ago in Axminster, and I would agree with him that it's really fantastic to see these facilities, and I know that my constituents are very grateful. Could he perhaps comment on when we'll see the opening of the next tranche, such as a banking hub for Sidmouth?
I thank the honourable gentleman for giving way. What I would say is that this is a rolling programme. We're trying to speed it up, and indeed, in due course, there will, of course, be changes and updates to that programme. Of course, if I continue, it is equally important that banks make an equitable and sustainable tax contribution, and the government's taken significant steps since 2010 to ensure this. First, we introduced the bank levy, as the honourable gentleman knows, in the wake of the financial crisis. Now, this was designed to encourage banks to move away from risky funding models and ensure they make a fair contribution. The levy has raised vital revenue to help fund the public services we all rely upon, over £28 billion so far, and it continues long after the financial crisis to bring in over £1 billion a year. Secondly, in 2016, we introduced the Bank Corporation Tax Surcharge. Banks currently pay an additional 3% rate of tax on their profits, which, when combined with standard corporation tax, means that banks pay more tax on their profits. You wouldn't know if you heard the honourable gentleman's speech. Banks now pay more tax on their profits than most other businesses, and a higher overall rate than when the surcharge was at 8%. This surcharge has raised over £13 billion and continues to bring in over £1.3 billion a year. We've also taken action to prevent banks from claiming tax relief on losses incurred during the financial crisis, as well as for compensation payments for PPI and other sources or in other cases of misconduct. Mr. Deputy Speaker, this money is the public's money. These measures help support the needs and ambitions of our country's citizens when it's appropriate for the state to do so. I know that is why the honourable member is so keen to see this windfall tax introduced. And although I share his concern for supporting the interests of his fellow citizens, the measures I've outlined today demonstrate how this government is already ensuring that banks make a fair and sustainable tax contribution. Having outlined how our current approach has generated significant tax revenue for the UK, I just want to conclude by turning to how deviating from the approach that I've set out, for example, by adopting a windfall tax, as he has suggested, carries significant risk for the health and competitiveness of our banking sector, which in and of itself would contain significant risk for the health and competitiveness of our economy. A jurisdiction's overall tax burden clearly informs decision made by internationally active banks about where to operate. It is also clear that other international financial centres, which are our competitors, recognise this as well. A higher level of bank taxation in the UK would, and I want to be very clear about this, significantly worsen our competitive position in relation to key global financial hubs in the US, in Asia, in Europe. This would have a threefold negative impact. First, it would put existing jobs at risk. Second, it would damage the chances of future jobs being created through new activity being set up. And finally, contrary to raising significant yield for the Exchequer, I fear it would have the opposite approach. It would jeopardise the considerable tax revenue, which I've already set out, already being generated by the banking sector. Mr. Deputy Speaker, the banking sector's contribution to the UK's economy should not be underestimated. The amount of tax paid by banks is rightly proportionate to that contribution. Now, let me be clear, the government still maintains that the sector should continue to make a fair and sustainable tax contribution. We've taken steps since 2010 to ensure this, and it is no contradiction to say that we need a strong and competitive banking sector that supports individuals, households and businesses, because that is foundational importance to our economy. Thank you.